Welcome in. You're listening to another daily editorial on the Korelin Economics Report. Cory and I are chatting right now with Rick Ackerman, as promised. Rick, I have a couple of questions for you specifically. There's not much we can talk about in terms of the markets today. I want to ask you two questions. The first one deals with, in your opinion, are we in a bear market for gold? A lot of listeners were talking about this yesterday. Or are we in a bear phase of a secular bull market? What do you think?
Well, I think it's the latter, although I'm certainly not ignoring some of the more illuminating commentary. I came across a very interesting essay or interview with a woman named Catherine Austin Fitz, I believe her name is, and she talks about essentially fraud in the international banking system. This is all Fed engineered to essentially skew money out of what she calls the legacy system into all of the new things that institutional investors are finding. But she makes clear that the skew is definitely intended to push money into stocks rather than gold. And that's why, at least in that way of looking at it, would explain why stocks are going up, and gold is struggling.
Rick, we had a couple comments on the audio yesterday that related to questions about the Chinese and why they continue to buy gold. Really, from my perspective, it is simply because they know the underlying value of gold, and just because they're not waiting for gold to go down, say $200 to accumulate more, they just continue to build on their position because they are obviously expecting gold to be much, much higher or really be a better store of value and wealth for their citizens. What are some of your comments on what the Chinese are doing in the gold market?
Well, I think we've learned that the Chinese take the long view. They're very patient. And the things that they do are really focused on what China will be in 10 or 20 years. So as far as accumulating gold, they're certainly not in there speculating. They understand that if they are going to be an economic powerhouse, that it would certainly be in their interest to have gold backing behind the Chinese currency. So they've not only accumulated gold at the sovereign level, but they've encouraged their citizens to go out there and buy gold. So we've got rather large inflows of gold into China at the official level, but also at the private level as well. And I think that's just part of China's long-range plan. They're not, as I said, playing gold and attempting to make some sort of capital gain, but they just understand that it's good to have an inventory of gold to back up their money system.
The Chinese are a very interesting player in this particular equation, for lack of better terms. I've been very, very interested in following and have been following the Chinese action since probably 2005 or thereabouts. And, a number of people have commented, as Cory said, on, what really is going on vis-a-vis the Chinese right now. And a comment that I made yesterday had to do with, it would be interesting to know what their average price was. I mean, I think it's pretty obvious why they're buying gold. I think they're buying gold because I would guess that eventually we're going to go back to an asset-based currency, and I think the Chinese are very aware of that. I would be really curious to know what their average cost is because they're pretty smart folks, and they didn't start loading up when it was north of $1,500 an ounce. They started loading up a whole lot earlier, and if I were to guess, I would say that you're probably looking at an average cost for them somewhere around maybe $1,000 an ounce or so, and I think that's being almost a little bit generous. What do you think, Rick?
Well, I think it's certainly, whatever their cost has been, it's going to be a very good hedge against the day of reckoning for the treasury paper that they hold. That's kind of an offset. And I think they understand that at some point when U.S. treasuries get marked to market, their portfolio, essentially dollar reserves held in the form of U.S. debt paper, are going to take a huge hit. So it's a very good hedge for them to be buying gold against their dollar reserves. But also, I think they're seeing things that we see, that even though it's not going to happen overnight that the world switches away from a dollar reserve standard, it's slowly happening under our very eyes. We see the Iranians, the Chinese, essentially a lot of U.S. enemies beginning to make deals that are settled in dollars. And the unfortunate thing for the U.S. is that most of these deals, the big money deals, involve energy. So that's really where the slow transition out of a world that's dependent on dollars is happening. And I want to add one more thing. one reason it's going to take some time is it will be hugely deflationary to have countries that are buying energy, that are importing energy, to pay for it in gold. And one of the big advantages of a dollar standard is that there's plenty of dollars around to pay for energy.
Boy, there certainly is. China really is a wild card in this situation, though, and I personally have felt this way for a long time. By the way, I wanted to say at the outset or at the ending here, this program is being produced exclusively for our friends at Kitco. You folks all over the world listening to this, have a great rest of the day. Cory, Fleck, and I are going to be back with you tomorrow.